What's going on, everybody? It's Stas here. Welcome back to another video. Hope you all had a great Christmas. Merry Christmas. Happy holidays. Long weekend. Hope you all had a great time. But I also hope you guys are ready for this week, because today we're going to be talking about the top 10 stocks to buy this week. And I also want to go over what happened last week in the stock market, breaking down some technicals on the S&P 500. And in general, I want to talk to you all about where my head is at as a trader right now, as an investor, as we're wrapping up this year and heading into 2021. So if you guys find value, hit the like button. Make sure to subscribe to the channel. We're so close to 20K. Maybe this video will push us over that 20K milestone. So make sure to subscribe to the channel, join the Discord chat, the Facebook group, and don't forget to also claim 4 stocks from WeBull. All of those are linked down below, and the beautiful thing is they're all 100% free of charge. So let's get into it, guys. First and foremost, like we do every single Sunday here, we're going to be talking about the S&P 500. And normally we would be covering the futures market as well, but I am filming this video in the morning here. It's 10 a.m. on the East Coast, and the futures market doesn't open up for another 8 hours. So we'll talk about it in the comments. Once this video goes live, the futures will be live. So we'll be in the comments chatting about it, but as of now, I have no idea where the futures are. But what I can tell you is the S&P 500 is struggling under 3712, right? This is an all-time high from a couple weeks ago. Back on the 9th of December, we hit about 3712. We also hit it on, what was this? So we had Thursday was a short day. So this was Wednesday. Wednesday, we hit 3712, and we got rejected. So what that's telling me is it's a pretty tough spot for the bulls, right? And this 1 hour chart also tells me that this is a head and shoulders potentially in the making here. We have the neckline at about 3712. That's where the left shoulder got rejected. We have the head here as we hit that all-time high at 3726. And now, yet again, we're struggling at 3712. This could be the start of the right shoulder and the breakout above 3712, or rather the lack of the breakout, is telling me, okay, this is the neckline confirming itself as resistance for the right shoulder, and we could be going lower. So this is very critical. It's crucial, guys. Where does S&P go this week? Do we break out of 3712 back over all-time highs? If so, that means that the head and shoulder did not pan out, right? That's good for the bulls. But if we break out, or rather if we don't break out of 3712, and let's say on this 5-day, 5-minute, we dump under 3700, which we actually rallied over on Thursday session, but let's say we break under 3700, which is another big critical level, that means, hey, we could be going down for those lows from Wednesday, for maybe on, what day was this? Let's just say, what was the date? The 21st of December at about 36.36. So watch for 3700. If we break, we could be testing lows, and back on that hourly chart, like I've been saying, that would be the completion of the right shoulder, which is a bearish pattern. So it's interesting. I don't know how things are going to pan out, but I'm excited. We have a lot up in the air. We have stimulus right now. Who knows how that's going to be finalized here, whether it's 600, 2,000, 1,500 per American, who knows? But once we get some more clarity on that, I believe that the markets will probably end up maybe going back up, or having a bit more certainty, because the markets don't like uncertainty. So watch out for stimulus, all this good stuff here, and those technical levels on the S&P. So let me know your thoughts down below in the comments on that, your thoughts on the market. And let's talk about here 10 stocks that I do have for this upcoming week. And maybe we'll do some bonus ones at the end if we do have some extra time. So make sure to stay till the end of this video. So Fastly, FSLY. This is one that I'm pretty excited about for this upcoming week. And it's really because of the price action from last week. I mean, take a look here. Fastly broke out of $99, $100, and we actually broke out of 102, 103, which was that resistance from back in the beginning of July. So the bulls had no problem breaking out of there, right? And it makes sense. We can see here, if I extend this channel to the right, what you can see is, okay, we're still kind of in that channel, but we were uptrending into that resistance at 100. So this was arguably an ascending triangle as well. So we bursted out of 99, out of $100, and now we're pulling back, and we're right around $98, $99 again. We're actually at about $97.50, right around this 50 SMA on this 4-hour chart. So this is critical, because if we're able to hold that old resistance from months ago, from a couple weeks ago as well, as a new support, and rally back off of that back into this channel on the 4-hour chart, that is going to be huge, because from there, Fastly could get a momentum squeeze up to, let's say, 105, 110 again. And who's to say it can't burst out of 115 where it was back in the beginning of August? I mean, we already did burst out. We bursted out once back in October from 115 to 120 to 136. Who's to say we can't do it again, right, guys? So I'm watching Fastly this week pretty closely. I'm excited about that one, ticker symbol FSLY. Another one that I think is breaking out here is CIIC. This is the one that's taking a rival public, right? Or it's a SPAC merging with a rival. And this is a company that has 10,000 pre-orders, whatever you want to call it, with the UPS. We've talked about that here on the channel before. And technically speaking, CIIC is looking pretty bullish. We broke out of this wedge here a couple weeks ago, more towards the middle of December. We broke out of that. And even before that, another big bullish pattern we saw couple weeks before that, back in November, is we did that same thing. We broke the wedge at about $20, rallied to 37. That was in the beginning of December. And then from 37, we pulled down to 27, got ourselves back into that wedge. But then these past couple of trading days, we broke out of that, right? And we called that out last week. We've talked about it. I've traded it. I've lost some money with this one, to be honest, in my last trade. But I still think there's upside. And we're going to be maybe testing, I'm thinking, mid-30s this week. I mean, take a look here. Ever since we broke out of the wedge from mid-December, we've been holding the uptrend nicely on the 4-hour, and we're pulling down here. Yeah, we saw a pull down from about 34 to where we are now, about 8%. But the beauty of it is we're still holding the uptrend. So I think there's still potential for this one to pop up to test 34. And heck, I think it could go higher. I think we could be going high 30s, maybe to test that high from back in the beginning of December. So CIIC is huge this week, in my opinion, and maybe even heading into 2021 as well. And I don't even know, I probably should know this, but do we have a day off next week again? I believe we have a day off next week. New Year's Eve is on Thursday, maybe Friday. Yeah, Friday, the market's probably closed. But yeah, heading into 2021, all of these stocks I think we're talking about here in this video are going to be very relevant. Let's just put it at that. And if you guys do know when the market is closed, a short day, whatever, drop it in the comments. I'll just go check after this video as well. But for anybody else out there that doesn't know, just drop a comment if you guys do know when the markets are closed, open, whatever. So the third stock is DraftKings, DKNG. We're seeing a big push into the 55, 56 level, which is a resistance from back in the middle of September. You can see here we got rejected right at 56. And just recently, again, we're getting rejected at 56. This was back on the 17th, 18th of December. And we're holding the uptrend in the face of that, right? So that's telling me, okay, we're uptrending into the resistance. That's an ascending triangle. So could we break out of that? I think so. I think there is a pretty big gap here on DraftKings to break out of, maybe from 56 back up to the low 60s if that ascending triangle does end up playing out. So I'm pretty excited about this one. Just watch out for that. But the second the 50 SMA breaks here on the 4-hour, you can see we're holding it right at about $52. The second that breaks, I'd be a bit skeptical, because we might be going back down to, let's say, the high 40s in that case, maybe to test the 180 SMA. And I wouldn't want to catch it there, because that could be a falling knife. But the closer we get to that 180 SMA, maybe 48, 49, I'd be even more interested in picking up shares at a lower price, right? So I'm watching DraftKings NNDM is another one, very popular stock here, guys. Very popular. I feel like you see all these YouTubers out there talking about NNDM to $100, NNDM to $300. I'm not going to give ridiculous price predictions like that because the stock's still at $8. But what I will do is tell you guys in the short term here with what we do see based on the technicals, what is going on. And I'm seeing, quite honestly, a head and shoulder on NNDM as well, same as the S&P kind of. And what we see here, 5-day, 5-minute, is the left shoulder right around here, the head at about 1050, and we obviously sold off aggressively that same day we hit 1050. We went down to about 870, and if we fail to break out of this 180 SMA on the 5-day, 5-minute, and we end up dumping off and going mid-sevens, maybe low sevens, or even high eight or low eights in terms of the stock's price. If we dump off, that would be the completion of the right shoulder. And honestly, you know, me being not in the stock right now, I would love to see it come lower, but if you guys are in it, I mean, I don't want you guys to lose money, but the truth is, the 5-day, 5-minute is telling me that there is potential for a dump off here still to the mid-sevens, low sevens, maybe even low eights, right around that 7-8 area, and I'd love to pick up shares there, which is why I kind of want it to go down, but again, I don't want you guys to lose money either, but either way, that's kind of what I'm seeing, and if we end up breaking out of, let's say, on this 5-day, 5-minute, let's say we break out of $9, $9.50. Hey, in the short term, we might be breaking out there. But overall, I'd love to see this one a bit lower, maybe $8, $7.50. I think that's a much better price to get in, especially as a swing trade, but we'll see. And the next one here is NVIDIA. I actually have a position in this one right now. I'm down a little bit, but I think there is potential if we're able to break out of, I'd say, 530, 550, and maybe I got in a bit prematurely, honestly. I took two positions, right? And typically when I'm swing trading, not always, but sometimes I like scaling into my positions. Other times I like building it quickly, buying one big batch at once. But with this case, for this case with NVIDIA, I bought a little bit at first, I believe at like 528, bought a little bit more at about 525, and now I'm down a little bit on those shares as the stock's at 520. But I think it's there's still potential, quite honestly. I mean, if we end up holding 520, the idea of this trade is we're going to squeeze out of this wedge. That's kind of what I'm looking for, and I'm sure I could be wrong. You know, if we end up dumping off this week, going into the low 500s, I'd probably cut the loss there, but again, I'm considering just holding on to it right now based on the technicals, as we haven't yet broken that support and dumped off, and there's still some upside here. If we do end up gapping up, you know, showing some further support at 520, 525, I think there could be some upside there. So I'm looking for NVIDIA this week. NIO is another one, NIO. How could I not make a video, or how could I make a video without talking about NIO, right, guys? So NIO at this point in time, if we look at it on this 20-day chart, we can see actually more on this 90-day chart. What we can see is it was in a head and shoulder. We broke out of that head and shoulder. That was very bullish, right? We didn't dump off and complete the head and shoulder, which would have been at about $35, maybe low 30s. We didn't do that. We broke out of the head and shoulder, which is great, but we are seeing resistance at $48, $50 here in the past couple of weeks. I mean, you can see it here on the 2nd of December. Pretty much all of December, we've seen resistance at $48, $50. So I think we just need to see the break out of there. Once we break 50, and I've said this before on the channel, once we break 50, I think NIO's off to the races. Mid-50s, if 55 breaks, which is another resistance, probably higher 50s. So I'm looking at NIO closely here, guys. I'm very interested in this one. And Tesla is another one, TSLA. Tesla, ever since that S&P inclusion, took a bit of a hit from about $700 to about $620. But if I clear this drawing set, there's a lot of mumbo jumbo here. If I clear the drawing set, what you guys can see is, yeah, it could come back down to mid 500s. That would be a healthy spot, but it hasn't broken the 50 SMA on the 4-hour chart yet. It's still holding the uptrend, so we can't say it's going to crash down to 550 because the technicals don't back that up quite yet. So I'm looking to see if this mid 600 level holds. I mean, you guys can see, again, the uptrend is holding on the 4-hour chart. If 650, 660 breaks, I mean, that's a resistance, obviously, from Thursday, but also from back in the beginning of December. I think it could end up going back up to test 690. As crazy as that sounds, I think Tesla could do that. I think Tesla could fill that gap. If 660 can break, there could be a short pop-up about 4 or 5% to 700. But again, back on that 4-hour chart, I would love to see Tesla mid-500s, right around that 180 SMA. I think that's a better spot. But with how hot Tesla is, this little ascending triangle we're seeing as well here on the 4-hour, I wouldn't be surprised if it just popped right out back to high 600s. So another one here is AMD. AMD Advanced Micro Devices has been pretty choppy, very choppy recently. I mean, ever since it broke 88 back in the beginning, end of November, beginning December, ever since it broke out, I mean, it's been struggling about around 95. It did a little bit here in the beginning of December. We finally broke out of 95, hit 98 a little bit, traded there for a couple days, but now we're right back at low 90s. We broke 95 as support. We did not hold it. Now we're at 91. So it's been a roller coaster here on AMD all of December. And I think this level that it's approaching, if I show you all maybe on the 90-day chart, this level it's approaching $88, $90, 91, wherever it ends up consolidating, it decides to consolidate. I think that level's pretty attractive as a dip, quite honestly. And at this point in time, the uptrend is still holding. And as long as it holds 88, 89, 90 bucks, the uptrend is going to be holding. So this one is worth watching for sure. This week into 2021, I can see this one be a nice dip buy from 90, maybe back up over all-time highs. I think there is potential there with AMD. And two stocks here that I'm not necessarily very bullish on, technically speaking, right now, but could be good short, or they could be good short opportunities. These are one, Zoom. We talked about this on Thursday, I believe, Friday, Wednesday, whenever it ended up being last week. We talked about Zoom being in a descending triangle. We're seeing lower highs into the base support at about 380 right here, 375, and I think if 375 breaks, I mean, we're going to see a pretty decent gap down on Zoom, whether it's maybe not low 300s, that's kind of crazy to say, but maybe 350, we might see a breakdown on Zoom, which was the level it was at in the beginning of September. So watch out for that descending triangle playing out. There could be a nice short play from 375 to 350 here on Zoom. And Intel is another one here that's pretty interesting. It's not as great of a pattern to short as Zoom is, in my opinion, but it's in the middle, because what we see here is we got rejected at the top of the channel, downtrending channel here on the 4-hour chart. That was a couple days ago, right? We got bad news from Microsoft not using Intel chips. Same thing as Apple with the new Mac that came out, which I am filming on this video so far. I love it. I'll probably make a video on it in a couple weeks. Who knows? But yeah, Intel's been taking a beating. And one thing we notice is it's in the middle of the downtrending channel here. We're trying to see a relief rally as we are holding the uptrend from about the middle or towards the end of October. What you guys can see is we're holding a higher low here, which is what I mean by this little uptrend. But again, we're in the middle of this channel. So I wouldn't jump to short Intel yet, because we might see a bit of a relief rally back up to $50. I think that could happen. But from there, that could be another short opportunity if it gets rejected at the downtrending channel resistance on the 4-hour. And even now in the short term, guys, the second it breaks 45, this little higher low it's holding here within the channel, the second it breaks that support, that could be a short opportunity as it could collapse right back to the low 40s. So Intel's worth watching. It's pretty interesting here. Could be a relief rally play, could be a short play. We'll see how that goes down. And the last one that I want to talk about before we do go over some bonus ones, because I realize this video, we're only 20 minutes in. We might as well make it a 25-minute video, right? So Alibaba here is one worth watching. This is one that collapsed on Friday, down 13%. And I've said it before. I'll say it again here very quickly for those of you that missed it. I think whenever a huge conglomerate, a massive company out there, whether it's Baba, Chinese company, of course, whether it's Apple, American company, Amazon, whatever, it doesn't matter if it's Chinese, American, whatever. If it's a company that's massive, huge customer base, massive total market share, that's making a lot of money, it's growing a ton, which Alibaba is. Whenever we see a company like that collapse over 30%, 40% from its peak, that is something that maybe you shouldn't buy it right away, but it should pique your interest, right? It should pique your interest. And for me, it's piquing my interest for sure. In fact, I actually bought a little bit of Alibaba here in my long-term account on Friday, and maybe I'll trade it here in the short term if we're able to hold 220 and maybe see some sort of push back up to 240, 245, as that is this gap that we are seeing right now. So, yeah, they're under investigation right now, but I think in the short term, this is a bit overblown, this sell-off. I think we are going to see a relief rally, but of course, that's my opinion. You guys must always do your own research, own due diligence. That's just my opinion, but I think Alibaba is great right now, especially if you have a 3 to 5 year outlook. I think this is a great company to own. Maybe not put all of your money into it, 100% of your portfolio. That's not wise with any stock, but having maybe 5% of your stock market portfolio in a company like Alibaba, maybe 10%. Hey, I think you're not going to lose money. In fact, you're going to make a lot of money long term doing that. But again, that's just my opinion, of course, because this is the Stas Fez YouTube channel, right, guys? So let's talk about some bonus ones here off the top of my head that I'm thinking about. So one of them is going to be Virgin Galactic, SPCE. This is one that recovered pretty nicely off that low. We called out the inverse head and shoulder here. You can see it on the 5-day, 5-minute. We called that out. Actually, nope, you can't see it on that chart. Maybe the 20-day chart. You can see it here, left shoulder, head, right shoulder. We broke out of there. Now we're seeing a bit of resistance under $27, but we're pulling down a bit, and we're holding $25.70 at a higher low. So maybe we can squeeze up out of $26, $26.50, $27, maybe up to about mid-27s here on Virgin Galactic. But the second it breaks, $27.50, I think there's even more potential, probably up to the high 20s, maybe low 30s, right? So watch out for Virgin Galactic this week. I just got a comment about ticker symbol STIC. I'm not too sure about this company, to be honest, guys. And whenever I don't know about a stock, I don't like to pretend that I know about it, right? But I got this comment, STIC versus Chewy. I mean, is STIC a competitor to Chewy? Seems like this is a SPAC here that I have to look deeper into. But I'd probably still go Chewy, to be honest, if we're looking that new SPAC versus Chewy, because Chewy's got the brand name. It already has the market share for the most part. I mean, sure, there could be other players, but at this point in time, Chewy is the top dog, the leader. And when we're looking at the stock, maybe that comment's referring to, short-term gains, Chewy versus STIC. In the short term, I mean, you could argue that Chewy's a bit overbought. I mean, I think it could come down a bit. We've been calling Chewy out. In fact, if you've been following the channel for a couple months, we've been talking about Chewy for months. Ever since the 60s to 70s, we called out this ascending triangle, and it broke out perfectly out of that. So you could argue at this point it's a bit overbought. I'd like to see Chewy maybe at $85, $90, a little bit under here. So maybe I wouldn't buy Chewy here, but like I said about Stick, I don't know too much about it, honestly, so I don't want to give an opinion there, but technically speaking, there could be a bit of upside if we're able to maybe pull down a $17 right around this EMA here on the 4-hour chart. And then again, we just don't have enough days of trading to really see the overall trend. I mean, at this point, yeah, the trend is up, but anything could happen. This could crash back down to $12 for all we know, and then go back up from there. So I don't want to give a full opinion on Stick yet. I'm going to look deeper into it. And that's pretty much it. I'll wrap it up here, guys. How long are we in right now? 25 minutes, perfectly. That is where I wanted it to be. So thanks for watching. As always, guys, Merry Christmas, everybody out there. Happy holidays. Hope you all have a great new year as well. Hope you guys put this crazy year of 2020 behind us, because it did. It rattled pretty much all of us out there, right? It was a pretty interesting year. Hope we go fresh into 2021, crush our goals, ambitions, and so forth. If you guys enjoyed the video, hit the like button for me. Make sure to subscribe to the channel. We're so close to 20K. Let's try to break that milestone with this video, so make sure to subscribe to the channel. And also join the Discord chat, the Facebook group. Claim your 4 stocks from WeBull. All of those are linked down below, and they're 100% free of charge. So I'll catch you all in the next video. Thanks for watching. As always, stay safe out there, guys. Keep crushing the markets. Peace out.